And here we go. What is up, everybody? BronxViking here. Tuesday, June 25th, around 10:30 p.m. Eastern Standard Time. Very sorry for the late video, but did see some interesting stuff occur on GameStop today that I thought was finally worth an update. I'm not just gonna blindly throw stuff out at you guys every single day if I don't think there's anything to really speak on. But today, definitely gave us some interesting price action on the charts, on the flow side of things, to really warrant a closer look here and show you guys what I'm seeing. So, that being said, yeah, let's get to it. So, GameStop on the daily. Uh, After printing the inverted hammer stick candle right here yesterday, that is an upside down hammer, can be indicative of a trend reversal, right? It doesn't have to be a regular hammer, an inverted hammer. Just the same usually is indicative of a possible reversal. Now, yesterday, I didn't really love the volume. Anytime you get a reversal candle, whether it's a shooting star at the top of an uptrend, inverted hammer, regular hammer at the bottom of a downtrend, I do like to see some volume coming in to really just slam on those brakes, so to speak, in either direction and stop and reverse the chart. We didn't get that, but all that matters, as if you followed me on Twitter and took a look at my post this morning, is that it's all about the follow-up anyway. So we saw just that. GameStop did look very ugly early on this morning. If we get into the hourly candles, opened up right around here, started off rejecting the hourly 9 EMA, and then we just kind of dropped lower and lower down towards this 2250 range, deep into this orange box that I've been tracking for a while. And then right around lunchtime, we saw a really, really sharp turn. And what's interesting again is that there was really no volume coming in to justify this reversal. So that's something in volume price analysis. You don't really like to see that. You really, like I said a few moments ago, when you have these reversals, you want to see forceful volume really coming in to abruptly stop, or you want to see some seller exhaustion, like here. This is some seller exhaustion occurring as the spreads, the body of the candles are shrinking, and the volume is really kind of drying out. Now here, you have opening volume, which is always kind of the higher point of the day, but it did pick up a little bit from 10:30 to 11:30 before this reversal. So I would have loved to see some more volume right here, but there's a reason why, and we started seeing some very interesting flow coming in right around that midday and definitely into close. So let's scoot over here to some of the flow that came in. And so if you're looking at, yeah, the time over here, right? We had coal selling off at the open. So this is your coal premiums, bullish coal premiums. And started the day right around minus 124, and then went all the way down to over 1.5 million sold off. Saw a brief little spike. But then right around lunch, that 12:30 time again, you were low, that 1.4 million time, and it just kind of flattened out, right? Whoever was selling calls really, really stopped. They stopped closing out positions, and the price kind of stabilized a bit. And then you saw a little bit more, just kind of sizing in some nibbling, some smaller orders, and you can track the flow of the call activity with the price, right? So you literally see as coal started coming in, price started to get driven up. And as this was also occurring, the put premium stayed relatively flat. And that was another thing to notice today. As the price was going down, you don't see these puts really screaming to the upside. Yes, you do see some climb here going into midday, but nothing really as aggressive as we saw with the coal buying. So that right there tells me that shorts are realizing that it's at a dangerous bounce zone on the chart, and they're really not interested in getting caught off guard by some unforeseen catalysts, unexpected news, whatever the case may be. So the shorts aren't really piling in. And so as they're kind of holding steady, whoever has their positions is okay letting it ride or has plenty of time on it, whatever the case is. These calls continue to pour and pour and pour and pour in. A slight little pullback here on the chart, but as that was occurring, that pullback, puts weren't going up and calls weren't selling off. So that's kind of your BS meters going off that. All right, coal buyers like this. They're holding steady. The premiums right there are still at negative 212 for the day, right? But still up from negative 1.5 at one point. So 1.5 up to 200. So 1.3 million added back in calls. And then you get to 330. And this is what I was posting on Twitter. You really see a flurry of activity kind of occurring here. And then from 330 on, you go from negative 1.26 million in premium all the way up into close to 2.48. So you had about 2.6 million, 2.7 million in calls added in the last half hour of the day. Super bullish, right? Because if you're adding calls at the very end of the day, that means you're going to be swinging those calls. You're not taking profits. You're not de-risking. You're feeling pretty good about the price action on the chart, and you're willing to let those ride. And then that goes right over to the chart itself, right? You see in that final, right there, timestamp 330 on, this massive candle just driven straight back up from the 2350 level right back into the blue box that I've been tracking for a while. So GameStop is heavily moved by calls, by options, derivatives. I mean, the majority of the market is, but GameStop especially. I mean, especially when you see the volume this low on the chart, it's not a ton of share buying that's really coming in. Like back here, you see this activity. I mean, this is really just delta hedging for some in-the-money calls coming in, and really just driving the share price up that way. And if we get into the chart, the flow rather, there's nothing that really stood out. Like if we filter this by premiums for like 100K plus, there was a few orders, like a handful of them today, but nothing really crazy. Like when we had the run from the last few weeks, where like look at 614, right? You have tons and tons and tons and tons of orders, literally all day long, flowing in, right? 100 plus, 100 plus, 100 plus, close to millions. 613, yeah, it's just nonstop, just laying it on, a million plus orders, right? So we didn't see that just yet, but the good thing is that we're seeing is we're finally done, for the most part, seeing these crazy YOLO or lotto type options coming through, which are really far out the money. You had one yesterday, this 125, this leap far out the money, but really it's these ones that you want to see. Is you want to see calls that are in the money, at the money, just out the money, because that's what really does build up your gamma ramp. That really does require more hedging. So if you look at the deltas, right, you want to see contracts and options that have closer to a 1 delta, right? So the higher the delta, the more hedging that's taking place for every, so it's more that, more positive pressure being applied. So it's good. I mean, buying and hold strategy, yeah, sure, but it's really in the money calls and at the money calls coming in big waves that really drive the stock up. So that is good. So you are seeing a few of those starting to come back in right now. But for the most part, it did kind of just feel like people starting to size into positions, people scaling in. There's nothing that was really jumping out. Like, yeah, you saw a pair of like 27s here. Something I do tend to look for is I do like to see repeated blocks of the same strikes. It lets you kind of know it's the same buyer. Like when Roaring Kitty was buying his calls back in April for the first big breakout, he was buying like blocks of like 5,000, 5,000, 5,000 at a time. He wasn't really, you don't see that yet. You're seeing some of these smaller ones, these 20K premiums. So what I'm really waiting for is I want to see like those 500K to a million premiums coming back in, or just the repeated hits of like, 120K, 130K, 150K from really looking like the same buyer. Like if there was 23 calls like this that came in like 5, 6, 7 more times, like over a million repeated hits, that would really get me excited, and that would really start seeing some crazy positive pressure being applied to the stock. So stuff like that I'm keeping out for right now. This does just kind of feel like retail traders sizing in. And again, there are some out the money calls, like 34 is pretty out the money right now. It's not ridiculous like 100 sees, but as long as you keep seeing, 25s, 22s, 23s, 24s, even these 27s are okay, even though these feel more like a lot over this week. That's what's really going to build up your gamma ramp and your positive pressure, and that's what gets the hedging and applying pressure to the upside. So overall, a pretty solid finish to the day. Can't be upset about that. It came in at just the right time. So let's get more to the chart and really what I'm seeing there. And we'll start our way out. So on the monthly, what we did was, we got the long signal back here in the monthly. We did break up, couldn't drive through as the second share offering was announced, really driving the stock back down. Don't need to tell any of you that. But what we did, and if you look at where the candle kind of rests now and where it got its bounce, right? It's bouncing right off, look at that wick, right off the previous candle close for May, and getting driven right back above this support resistance flip. All right, so for pretty much the entire first half of 2023, for 7 months here about, GameStop could not close a monthly candle over this 2466 level, call it 25 level, right? It could not do it. Every time it popped over, supply, resistance, just getting sold off, sold off, sold off, and eventually longs capitulate and driven back down. It was support back here, right? Bounced hard many times throughout 2022 and then got trapped underneath it. And then it just goes down searching for liquidity before what? Before we finally have a catalyst, which we did, and break on through. So now we broke on through, and now we're retesting it. So on the monthly, that actually looks really, really clean. And 2 days left in the month here, so kind of important to really hold this level and even drive up a little bit more. The bigger the bounce, the better. It'll be a higher volume bounce, even though the volume's kind of fading here in the back end on the daily, as you'll see, compared to the earlier start of the month. But overall, that looks pretty good to me. So liking what I'm seeing there. Now let's get to the weekly, which is really catching my attention. So what you have going on here, those of you that know, I do use an indicator. I just referenced it before with a monthly long. GameStop, and really what these long and short signals are and indicators are, they're really just letting you know about breaks in trend. So anytime you get driven down too much, you break below the trend, you fire off a short signal and exit long signal. If you break out of a downtrend, you exit short, you fire off a long signal. Now, exit shorts and longs, you want to see the follow-up direction, right? Exit short, meaning get out of your short positions, it's about to go long, and it did. Exit long normally would mean, right, get out of your long positions, time to go short. However, this candle is getting bought up. And what that shows me and tells me every time I use this indicator is that bears are failing here. They're really trying to drive it down. They're trying to establish a new downtrend, and it's getting bought back up, right? And it got bought back up directly off of the weekly 9. So it came down on the monthly, as I just showed you, retested that 25 level on the monthly, the previous candle close, right? Bought back up. Go to the weekly. That also happens to be your weekly 9 EMA, bouncing off of there. Now I'll show you some real examples of other stocks and charts where I used exit long signals getting invalidated, right? Because they're not getting sold through, they're not exiting the long, they're bouncing and they're rejecting it, and that's a sign of capitulation. So if we go over here to, Dell. So back to back, these candles here, Dell was trending up, had a nasty breakdown through the 9 EMA, fired off an exit long, and same day got driven right back up, maintained this uptrend, kept riding the weekly 9. Same thing up here. Looked like it was in a rising wedge, faked a breakdown of the rising wedge, got driven back up, and then fired off a weekly long, and then boom, just more big upside there. Next chart, Wolf. Perfect example just yesterday in Wolf, right? Crypto was selling off hard. We had that double top on Bitcoin, looked really, really nasty. Wolf broke its uptrend, dipped below its 9, and they got bought right back up. And then today, long signal, a huge reversal. So really what it is, again, is just a sign of shorts and bears trying to drive the stock down and failing epically. It's a failed bearish move. And anytime you have a failed bearish move, they tend to get out of the way and they let the thing run even more, and then they'll reshort it on the next time up. But they're not just going to keep banging their heads against the wall and letting theta wreck their puts and their shorts position if it's a futile effort. So that's really what it is. So, and that's what we're seeing over here, like I said, on the GameStop Weekly. Now, in order for this to officially invalidate, we still have 3 more days left on this candle, right? Wednesday, Thursday, Friday. So the next 3 days, in order for me to feel good about this candle, is we need to at least, like I said, close above this 25 level and really make a push. The bigger push, the better, right? It just shows more confidence in failed downside from bears and a strong reversal push up from the bulls. So something like this really gets me excited because, like I said, puts weren't coming in. I showed you guys that before. Call buyers are starting to gradually step back in. It does feel like there's seller exhaustion and the tides are turning for, at the very least, a relief bounce, right? Until the next catalyst. I'm not going to claim to know what the catalyst is. It was much different the first time around a few weeks back, and when we had Roaring Kitty step in, when we had some other things on the table with GameStop. Right now, it's kind of unknown. And then that's another reason why shorts get out of the way, right? Is Ryan Cohen and GameStop are now sitting on a lot more cash, and they have a lot more maneuverability to pull out a wild card, right, on shorts. So if you're shorts, that's why they're so trepidatious to keep piling in here, is because it's not the same company it was even a month and a half ago. They're significantly stronger on paper right now. So you can see. And the more we get driven up, the more shorts are going to run, close out their positions, capitulate, and give you some more upside pressure. Kind of like just right back here, right? When we couldn't advance anymore to the upside, longs get out and you get a violent snap back down. It goes both ways. So at the very least, even if we don't follow up strong out of here because we don't get a catalyst, I still want to just trend along this. Just keep holding this level, keep riding the weekly 9 right up, make that form a new higher low on the larger time frames, the monthly, the weekly, etc., until you get that catalyst, and that just forms a larger launch pad for your next move up. Going over to, so the 4-hour chart, the zones I was watching, right? Anytime you get that sideways action, what's going on right there? And I mentioned this in the first 2 videos I spoke about, and definitely the second video, is you start to see IV, implied volatility, really drop on the contracts, the call side and the put side, just calls in general, options in general, rather, pardon me, because there's sideways action. And as mentioned back here with this sideways action, is that's what any options trader really wants to see. You don't want to chase calls or puts when things are absolutely juiced. You want your options nice and cheap for the next big breakout so you get the best possible return. And that's what's happening here, is you're getting that IV crush, you're getting that return to normal. And that's why I believe right now, more than anything, you're seeing a lot of call buyers finally to size back in, finally scaling back in, because it's worth the risk to reward, right? Like I said, they're not paying $1,000, $2,000 for, a $30 call contract expiring in 1 week. They're back to a normal price range around 100, 200 bucks. A huge decrease. And again, make it worth the risk to reward. So we keep doing that. Either trade sideways, start to overcome some of these levels. On the daily, something else. Let's get over to it. Another kind of failed bearish move, right, is the 921 crossed right back down yesterday, finally, but the stock got bought back up, as mentioned, and it's flattening out. So anytime you get, like right here, perfect example, it looks like it's crossing down the 921, and then what happens? It flattens out, and then you get your big boom reversal, right? They can't drive it down anymore, and bam. So same thing right here. Tomorrow, if we get some follow through on this is going to uncross, and it's going to be like what? It's going to be like shorts hitting a brick wall, failing to drive it down, capitulate, and give you some more upside relief. So that being said, what am I looking for for next on GameStop here? I want to see volume continue to come in. I want to see more options activity really picking up. As mentioned at the beginning of the video, right? You only saw a handful of $100,000+ contracts come in today to the call side. I want to see a lot more of those. I want to see, like I said, we can just do a little quick historical context for the past like 30 days, 14 days. Yeah. So really, this plus, and again, look at the call premiums up here. Plus 2.5 million on the day. It's nice. Like I said, it's putting in like holding a bottom, but it's not really sending the stock, right? You really want to get back to the days of like back here where we had a plus $18 million day. I mean, that's when you saw the stock price go from 23 all the way up to 30, right? And then, I mean, especially back here, right? This day was just a monster. June 6th, where you ran from 32 all the way up to 47, and you had plus 60 million or 59 million come into the call side. So right now we're kind of at average, and you see the same thing, right? You really don't see puts rising. Here's a perfect example of puts really stepping in, calls really selling off, and you see the reaction it had on the stock. Same thing here, right? Puts really rising, reaction on the stock. Calls rising, stock getting driven right back up, calls sold off, stock driven right back down. So you get the point, right? It's these options contracts are 100% moving the price of GameStop right now. So the more positive delta pressure, the more call buying at the money, in the money, just out of the money is what really does the trick here. So that's what I'll be looking for, those large clusters of options contracts coming through, those net premiums really, really spiking like we saw today. I've been calling it out for you guys every time I see it. And if we have a day that starts going to 5 million, 6 million, 10 million, I mean, you for one will see it on the price of the stock. But I will for sure be tweeting it out, tagging it, updating it, so everyone can see what's going on and make the best decision. But also, it's not financial advice here, and I will continue to show even the bearish sell-offs too. I'm really not going to pump hopium if we're selling off hard and we're doing what I showed you guys back here, where puts are flying in and justifying the move down, or calls are selling off, justifying the move down. I'm going to call that out as well, and you guys can make the best informed decision for yourselves and your portfolio. I get it's an emotional trade for a lot of people, which has become very apparent in my Twitter comments over the past month or so, but it is what it is. It's the net positive of helping people out by getting good information out there. I'll take the handful of trolls that really don't give a shit. So keep tracking. We'll keep following. Don't make any emotional decisions. The best thing I can possibly say. If you see things really just running and ripping, and just realize you're chasing an IV spike, right? You really want to see things maybe form some nice good patterns, some flags, some sideways consolidation, and then you make your move. Like I said, now's the time, in my opinion, like I said in the last video, of ideally when I look to enter, when other call option traders look to enter, is when that IV is really kind of flattened out. And then whatever you do from there is entirely up to you. But yeah, it's nice to see the blue zone recover today. A little liquidity sweep to the downside here, as mentioned on the monthly, to just fake it out, fake out a gap fill, fake down the break towards this $20 level. It looked like it was going to do that to me for a bit, and then, like I said, the options activity told us a different story and painted a different picture today, and that's all we can do. Like I said, it's nothing, everything's going to change. The market is always moving. If you look at your screen, right, the candlesticks are always moving. So you got to be reactive. Have a plan, have key levels to identify and chart. But other than that, make this the wise decisions. Okay, I don't want to hear any more stories about any bag holders because GameStop was up 50, 60, 70%, and IV was at 500, 600%, and they're chasing calls then, and then they don't know what to do with their positions. I'm never going to tell you guys when to buy, sell, hold, whatever. All I can do is just keep updating what I see and what I think, and that's that. So just to wrap this up, daily levels I'm looking for, I really, really, really want to see candle closes above 26, because 26 for the last week has been supply slash resistance, right? We couldn't close any candles above 26. So if we get some strong follow through this week, get the 921 to cross right back up on the daily, close some candles, maybe even pop through up to like 27, break up, come back down, retest 26, and then bounce from there back towards ultimately 31, 32 for the next big test of supply. That would be picture perfect. But we'll see. I mean, you can get a catalyst, you can pop right through this entire zone. So either way, all about levels to me, all about charts, all about flow. You know where to find me on X, Colin Glebman's Discord. I'm in there for full breakdowns on how to really learn this stuff and spot it on your own. But that's really what it is. It's all this education based for me. So no hopium, no crazy price targets, one day at a time. And I hope this was helpful, guys. So thanks so much for taking the time to listen. And hopefully we get a real exciting day tomorrow. And if not, we'll just keep on watching, keep on tracking, and wait till the next good thing. Thanks, everyone. Have a great night.